Welcome to my channel, Wealth Ledger.
If you're just starting your investing journey, you've probably felt overwhelmed by all the noise, stock tips, crypto hype, real estate gurus, and endless videos promising the next big thing. But here's the truth, investing doesn't have to be complicated, and you don't need to chase trends to build real wealth. In fact, most successful investors, whether we are talking about Warren Buffett, Ray Dalio, or everyday people who quietly retire as millionaires, follow a few timeless principles that never change, no matter what year it is or what market you're in. In this video, we are going to break down the 3 golden rules of investing, especially designed for beginners in 2025. These rules will protect you from costly mistakes, keep your money growing, and help you think long-term instead of chasing short-term excitement. Let's dive into the first golden rule: invest for the long term. One of the biggest traps beginners fall into is trying to get rich quick, jumping into whatever's hot right now, whether it's a meme stock, a flashy crypto, or a risky day trade. And sure, some people get lucky, but most end up losing money because they're playing a short-term game in a long-term arena. Real wealth is built over years, not days. Think about the stock market, it has ups and downs, but over decades, it has consistently gone up. If you had invested $1,000 in the S&P 500 30 years ago and just left it alone, today you'd have more than $15,000 without doing anything fancy. The power here is compounding, the idea that your money earns returns, and then those returns earn returns, snowballing over time. That's why the first golden rule is to stay invested, stay patient, and think in decades, not weeks. Your future self will thank you. Now, let's move to the second golden rule: diversification. Beginners often make the mistake of putting all their money into one stock, one coin, or one type of asset. It feels exciting, like betting on a sure thing. But the reality is, even the best companies can struggle, entire industries can collapse, and hype can fade. Diversification is your safety net. It means spreading your money across different asset classes, stocks, bonds, real estate, index funds, maybe even a small portion in alternative assets. Within stocks, it means owning companies across different industries and regions. For example, if you only invested in tech companies, you'd be crushed during a tech crash. But if you balance tech with healthcare, consumer goods, and energy, one sector can fall while others hold steady, keeping your overall portfolio safer. Index funds and ETFs are fantastic tools for diversification because they give you exposure to hundreds of companies at once, with a single investment. Diversification doesn't make you rich overnight, but it prevents you from going broke, and that's more important for beginners than chasing the highest return. Remember, rule number 2, never put all your eggs in one basket. Now, on to the third golden rule: never invest money you can't afford to lose. This rule might sound harsh, but it's the foundation of safe investing. Too many beginners take their rent money, their emergency fund, or even borrow on credit cards to invest in something they don't fully understand. That's not investing, that's gambling. Real investing should be done with money you don't need in the short term. You still need an emergency fund of 3 to 6 months of expenses set aside in cash before you even start investing seriously. That way, if life throws you a curveball, job loss, medical bills, or car trouble, you're not forced to sell your investments at a bad time just to pay the bills. This rule also protects you emotionally. If you invest money you can't afford to lose, every dip in the market feels like panic, and you'll end up selling too early. But when you invest responsibly, you can ride out the ups and downs, knowing your basic needs are already covered. That's why rule number 3 is so critical. It keeps you in the game long enough to let rules 1 and 2 work. Together, these 3 golden rules create a simple but powerful foundation: think long-term, diversify your portfolio, and only invest money you can afford to lose. If you follow them consistently, you'll avoid most of the mistakes that wipe out beginners and instead position yourself to grow real, lasting wealth. To put this into perspective, let's imagine 2 investors, Alex and Sam. Alex wants quick money. He puts everything into one hot stock he saw on social media. At first, it climbs, but then the company misses earnings, the stock crashes, and Alex loses half his money. In frustration, he sells at a loss and gives up on investing altogether. Now Sam takes a different approach. He starts small, sets aside a little every month, and invests in a diversified index fund. He never touches his emergency savings, and he ignores the daily noise. After 10 years, Sam isn't stressed about markets dipping here and there, because his portfolio has grown steadily, riding the long-term upward trend. Which investor do you want to be? The choice is obvious. These rules aren't flashy, and they won't make you rich overnight, but they're the proven path to financial freedom. Think of them as your compass in a noisy world full of distractions. Whenever you feel lost or tempted to take a shortcut, come back to these golden rules, they never fail. And here's the final truth: investing is less about timing the market and more about time in the market. If you stick with these principles, stay disciplined, and stay patient, you'll put yourself ahead of 90% of beginners who chase hype and ignore the basics. So as you step into your investing journey, remember, Rule 1, think long term. Rule 2, diversify. Rule 3, never invest money you can't afford to lose. Follow these golden rules, and you won't just be investing, you'll be building wealth, security, and freedom for your future.
Thanks for watching video. Please share with friends. Subscribe, bell icon, and share.